Today, some G20 nations are lashing out against the Federal Reserve's $600 billion stimulus plan because you've just seen the dollar implode on this news. My next guest says that as a result, we could be A, on the verge of a currency war, and B, even a trade war. But it's not entirely bad. There are ways to play this. The big winner here, gold, topping a record $1,400 an ounce today. And that, my next guest says, could be your ticket. Where does it go next, though? Joining me now in a Fox Business exclusive from, of course, West Palm Beach. Where else? Is James DeGiorgia. He's editor of the Gold and Energy Advisor and the author of The Trader's Great Gold Rush. James, you called this level. You said we would hit 1,400. What's the next
signpost? It's the third year in a row my target's been hit.
Yep.
It's been the third year in a row that my target's been hit, and it doesn't surprise me. One of the most surprising things, however, this year is the rapidity at which concerns over a currency crisis, a monetary crisis, and potentially a bond market crisis has lifted into the news and drawn attention. Mm-hmm. This is something I've been writing about since 2004, and what really concerns me and potentially could drive gold to that $5,000 high that I've written about in my book. That's nothing to look forward to, unfortunately.
Okay, 5,000. When do we hit that?
Well, I figure next year, looking at the way things are starting to shape up, we should hit $1,650, $1,700 in 2011, and I'm very concerned that we'll see $2,500 gold within the next 2 to 3 years with a spike, which is what I would consider an overnight or over a few week panic that sets the bond market and the currency markets in turmoil, and then we see that lofty $5,000 number.
Okay.
By all means, it's something to be feared, not something to look forward to.
Well, I'm glad you just said that, because you said I fear, yet some of your investment recommendations have a lot to do with commodities and needless to say gold. But are you recommending to people that they can profit by getting into physical gold right now, even at what some would consider to be pretty high levels?
Well, I recommend going in not necessarily because there's a profit, although that will definitely be a result of it, but I recommend it as a hedge against turmoil. And I think that's what we're seeing on a daily basis as gold rises, whether the dollar's up or the dollar's down. We see huge pools of billions and billions of dollars out there, and people are taking portions of their investment dollars and they're putting it into gold, and that's what's driving it, as a hedge right now.
Let me just show viewers gold right now. Now we're in the, hold on a second, we're in the aftermarket at the moment. It already closed down at the NYMEX at COMEX where they trade gold, but at the moment we're still up about $10.30 to $1,408. Now, we talk to George Giro all the time over at RBC Wealth Management. He put out a note today. It caught my attention immediately. Here's what he said. In addition to short covering, so people were actually thinking gold might go down, but they didn't, so people had to cover their shorts. We saw more hedge buybacks in the market, so now the next marker could be 1,500 by year end. What we're seeing in silver, Mr. DeGiorgia, another spike here. Can I just quickly ask you, do you even look at silver, and what's at work here? Is it just taking on the gold tail?
Absolutely. I've been recommending it since it was $6 an ounce in the silver and gold, the goldenenergyadvisor.com, and what's happened in that market is a massive short that was held by larger financial institutions. There were two of them, and then when all hell broke loose in March, that particular firm was bought by another firm. And they've been slowly unraveling this gigantic short that's been driving silver up. And at the same time, the consumption of silver and the supply of silver has been dropping. So I wouldn't be at all surprised to see silver break its $50 historic high, or $45 historic high.
James,
I wouldn't be surprised at all.
We always love to let our viewers get some investable ideas, and right now you like 3 energy names on our screen: Anadarko Petroleum, Ashland, and Barry Pete. Barry Pete's chart is an interesting one to me here. As you can see, it has spiked and done very well since about July. Looking at Anadarko, that's down about $3.02 today. It's also trying to get back up to its 52-week high. Here's Ashland. But when these names pull down, James, is that something where you would say, buy Anadarko right now because it's pulling back?
Anadarko today it pulled back because there's news that BP and other interests on that oil spill didn't necessarily make a decision based on the bottom line, that the errors that were made were something other than because of the cost of money.
Okay.
But the reality is that the parties involved there were reckless, and Anadarko is going to wind up bouncing back. It's roughly half of what it traded at its market high, not its 52-week high. We've seen oil go from 45, into the mid-80s, and I think we have to get used to a world where oil is going to trade between $95 and $110 in the short term. If inflation takes place, if this quantitative easing turns out to be highly inflationary, we better get used to, the high of 140. By the way, we recommended in the goldenenergyadvisor.com, to sell at the height, and we've been recommending to buy since the lows of September of the year before.
Okay, smarty pants, we'll take it. And here's BP coming up off the lows, but he still likes it right now. Ticker symbol BP.
I went out and recommended BP, and you should see the mail that I got.
You got hate mail, right? Oh boy.
Oh, God, I got hate mail like crazy. And you know what? At $37, $38, when we recommended getting in recently again, that seems to have been the level.
Indeed. James, good to talk to you. Thank you so much. And by the way, if you don't know this guy...
Wonderful. I'm a huge fan of yours, by the way.
Oh, that's so cool. Thank you.
Yeah, you've been a great financial journalist over the years, and you don't get anywhere near the credit you deserve.
Okay, I'll send you my Krugerrand that my dad gave me. No, you can't have that. James DeGiorgia, editor of the Golden Energy Advisor. He is also author of The Trader's Great Gold Rush. Thanks so much to James.